episode 1 of my new real estate series. I'm Bobby Tinoco with Century 21 Tennis Realty. And today we're here at Lewis Landing Park, one of Fort Lauderdale's beautiful parks. I'm here with Cheryl Baldwin. She's with Community Lending. And we're going to talk real world mortgages. We want to do smart buying strategies, and we want to talk about what buyers and sellers actually need to know in today's market. So let's get into it. Cheryl, thanks so much for coming and meeting me here today.
Oh, it's a beautiful park. I'm happy to be here.
Awesome.
Absolutely.
Awesome. So tell us a little bit about yourself. Tell me, how long have you been in the business? What does Florida mean to you?
So I was actually born and raised here in South Florida since I was born. I stayed here for about 18 years, went to college and came back. And once I came back, I just got right into mortgages. So I'm going to date myself, but about 22 years I've been doing it.
22 years.
22
wow.
years.
That's awesome.
Had a lot of back office experience, processing, junior underwriting, loan officer assistant. So I've literally done everything, which gives me that kind of one up as far as understanding how to read tax returns, knowing what conditions, guidelines, super important.
Yeah.
If your loan officer doesn't know guidelines, it could be
and also the underwriters, I always say, like, they are the kind of like the ghosts in the background, kind of making sure stuff goes through. And as you're saying, it's important for a mortgage broker to know what they want, what they need to get these deals done.
Our underwriters are like our best friends. They're amazing. Like, they work late hours, they work weekends, like they know and have sense of urgency. So it's not like some banks where it's just a file number.
Mm-hmm.
So they are really always about our buyers.
Now, do you work with the same underwriters every time, or is it different ones? Okay.
I do. We have an assigned underwriter to our team. So this way, and we have assigned processors, and they're all local.
Mm-hmm.
And our same thing with our processing, our loan officer assistants. So same one. I like to keep it to where you're not calling an 800 number and getting 10 different people. Everybody, it's very, very structured.
I recently had a deal that was like that.
Oh,
we were working with 6 people, that were all in the background of the mortgage. And I was like, I would never go through this with Cheryl.
Yeah,
I knew that.
No.
So let's get into some questions here. Tell me, what is the biggest mortgage mistake buyers are making these days?
I just have to pick one. Okay. So I think right now it's picking your lender too late. Not speaking with the lender soon enough, because yes, talking with a real estate agent is great, but you need to know what you qualify for. Mm-hmm. So when people what they're doing is they're window shopping, and that can be dangerous because you're always going to fall in love with the shiny penny.
Of course.
Right.
Yeah,
and then, but your budget may be down here as far as a monthly budget, and that may meet a certain price point, and that price point may not meet what you're looking for. So you may not have 5 bedrooms. Mm-hmm. You may not have, a pool, like things like that. So it's important to know what you can qualify for before you start shopping. And it's hard.
Now, would you say people, when they come to you, are they looking for a certain monthly payment, or are they looking for a certain budget overall on the property?
So that's a great question, because I ask both. Mm-hmm. We want to show them what the max they qualify for is, but we also need to say, but here's what your budget means. Mm-hmm. What I find is a lot of lenders are sending out pre-approval letters, not sending out estimates, showing them what their monthly payment is, showing them what the closing costs look like. So one client had to bring, I think it was like $60,000 to closing, but based on my conversation with them, they wanted to use a gift from a family, but they were only within a budget of like $20,000, $30,000. Mm-hmm. So I said, okay, well, where's the rest of the money coming from? So in that point, we could have you shopping for a house, and the payment is over $3,500 a month. Your budget's $1,800. Now you're stuck into a legal binding contract. Yeah. You just drove around for months with a real estate agent. The real estate agent wasted time, right? And it's just a disappointment, and it creates a bad experience. And we're all about protecting buyers. So you're the same way.
I mean, even the escrow is important. There's a lot on the line when people get under contract.
Yes.
For sure.
Yeah. So
why choosing the right mortgage broker actually matters?
Because there's a lot of people that don't, and you can attest, don't handhold or walk their clients through every detail of homeownership. They're just like, here's your letter, best of luck, let us know when you're in contract.
Yeah.
Some don't pick up the phone. So when things get a little hairy, because it's South Florida, not every scenario is perfect. Not every buyer's scenario is perfect. Not every property is perfect, but does that lender know how to resolve challenges and resolve problems and find alternatives? Do they just give up when someone says no, or do they fight to make sure we can find a way around to make it still work?
And as a real estate agent, is super important for me in my relationships with my mortgage brokers,
Yeah.
that they are in the fight with me.
Yeah.
You know, I hate when you feel like they're
Right.
gone or something like that.
Well,
I'm
we
sure
don't
agents
want
too.
buyers losing money.
Yeah.
You know, we don't want to risk their money
Absolutely.
for sure.
And the customer experience is just so important.
Yeah.
You know, like you were saying, you don't want to put a bad taste in their mouth. And now,
It
you know, you've turned what could be the happiest time of their life
Right.
into something that's a little not.
Exactly.
So let's get into the VA loans. I know that that's one of your specialties.
I love
So
it.
VA and military buyers.
Yes.
What do most people get wrong?
I think the fact that they don't know they have bonus entitlement.
Mhm.
So they feel that buying a home with their VA, certificate is a one-time thing. A lot of people have some negative outlook on the VA and how they don't feel it protects or takes care of the veteran. In this case, there's a specific strategy I teach my veterans on how to utilize the VA to not just gain home ownership, but to build stability, because you never know what tomorrow's going to bring. We could have another government shutdown, right?
Yeah, yeah.
And then they have no money. Like, what's happening? So there's a way that they can actually use their VA benefit to live for free or live with lower housing costs and even make money off of it. And we've helped buyers buy houses with 0% down and nothing out of pocket. So
now with a VA loan, are you able to get, can you buy like a duplex? Can you get income producing properties, things like that?
absolutely. Now, when you say income producing properties, the VA only allows for primary residence. So the veteran would have to live in one unit for at least 12 months, fulfilling that primary occupancy. After that, if they choose to vacate and buy something else, they could, because life happens. Maybe their family's expanding, or maybe it's just a location they just want to move out of. They're not happy. So they surely can move out after 12 months.
So the marriage is only 12 months for that primary resident stipulation.
Yep.
Oh, very cool.
And they can use the rental income from the other 3 units to offset the debt of their mortgage, making them live for free.
There you go. There you go. So back to when a buyer should select a mortgage broker. When is a good time?
I think the moment that they think, I want to be a homeowner this year, because a lot of people try to time the market, right? And there's no timing the market. But let's say they're like, well, in a year I'm going to buy. Well, the best time is to find out now, because now you have a year to strategize, plan, save, and maybe there's something on credit that needs to be fixed. Maybe we need to save a certain amount. Maybe we need to work overtime more for that year so we can use that income. So there's just, we come up with a game plan. We don't just say, here you go, have a great day. It's like, well, let's put your best foot forward. How can we get you the best interest rate, the best deal, qualify for what you need to qualify for, and set you up for extra savings, reserves, and just put you in a better position?
So you're almost like a financial, it comes out with a financial plan is what you end up working with.
We are your mortgage advisor. We're not just a lender that says, here you go. We are going to walk you through to set you up for success.
So when I go to your website, I fill out the application, we get approved. How long does that approval last? I mean, is it something I could just keep on going with for a year? How often would I have to keep getting my credit pulled? Things like that.
So typically it's good for 120 days, your credit report.
Okay.
They like to see you, the pre-approval be 90 days of shopping, because you're going to go into contract and you usually have a 30-day closing window. So we don't want to be pulling credit all the time. So typically if you can be pre-approved, find a house, and close within 120 days, you're in good shape.
Now, I know a lot of people are worried when they get their credit pulled that it knocks their credit score down a little bit. What do you have to say about that? I mean, is if I go to multiple mortgage brokers, is my credit score going to get bumped down every time they touch it?
No. So there is a window. You have a 14-day window. So from the time that the first lender pulls your credit, you can have it pulled again and again and again within those 14 days, as long as it's shopping for the sake of a mortgage, and it will not negatively impact your score. If you're outside that 14-day window, it's a 6 to 10 point hit. But if you get to the 120 days, you haven't found anything you like, which is it happens, you would have recouped those 6 points within 4 months. So you should be fine.
Oh, so it kind of resets back after the 4 months.
You should be fine, as long as everything's being paid on time.
So credit myths that stop people from buying homes.
That they can go buy furniture. I had one lady buy a Louis Vuitton. I was like, go return it.
What if they go in and pay cash for it? Is that all right?
Well, do they have assets for closing?
Got it.
Right? Yeah, we have to think, how are we on a budget here? So I would say credit myths is they don't realize that checking on this sale at Home Depot and opening a credit card to get a discount affects their score. It's a hard inquiry. So don't shop, don't inquire for rewards, don't do anything without telling us.
Now, would you say don't do anything without telling you while you're shopping or when you're actually under contract?
Both.
Both.
Yeah, don't do anything while you're getting pre-approved until you have closed and funded.
Till you got the keys.
Till
you got the keys.
Till you got the keys. Don't do it. Don't do it.
So let's see. Interest rates, buydowns, and seller credits. What actually works with those?
What do you mean what works with those?
Well, which one would you say is better? You know, I know that there was a time when they were telling everyone to do the interest rate buy down, and interest rates really didn't come down too much.
Right.
So, you know, there's that, a 3-2-1 buy down, or the seller credit. Sometimes it's best to lower the price. What type of circumstances would you say are best for those?
So I think everyone's scenario is different, so I can't say which one's best. One may fit someone else's needs better than the other. So the buy down is good in the space where it solves this first year's problem, right? The way that it works is you have 2 years of, let's say we lock in today at, we'll just say 5.875, right? Because that's where kind of the best rate is. So we'll say 5.875. If you get a buy down, a credit from the seller that can go towards buying down that rate, what it does is the seller pays the interest for 2 years. Okay, so the first year you're basically paying 2% off of that 5.875. So you'd be paying 3.875 that first year. Then
so
after
savings for the,
it's a significant amount of savings. But then the next year it goes back to 4.875, and the third year it'll go up to where it was originally locked at. So it could help as far as giving them savings throughout the next 2 years until rates kind of come down to where hopefully we'd like to see them in the low fives. I don't think we're going to see them in the 3s or 4s anytime soon. So that's how that works. But let's say they refinance in a year. Do they lose the money that the seller just contributed? No, that goes towards their principal balance, helping them get a little bit of equity. So that's a good scenario for someone who is rate conscious, payment conscious. Now, as far as needing assistance in cash to close, the seller credit concessions, that helps kind of cover the closing costs. So if they're short on funds, that's where that would help. What's really cool is with the VA, you can use the seller credit to pay off the debt for the veteran.
Oh, wow.
So when we have veterans using down payment assistance, but that covers their closing costs, but then the seller gives, let's say $5,000. I'm like, well, I'm paying off this credit card. Like,
so
why
it's
not
almost like you're getting money. You're coming to the closing table and they're paying you
and
to buy the house.
And fixing your credit.
And fixing your credit. Wow. Wow. And then let's see. So the interest rates you were saying, they're getting into the 5s now.
Yep.
We haven't heard that for a while. So is there something that's happened lately that has made that happen? Or is that just a natural progression of things coming down?
I think it's a natural progression, but there are the headlines of, you know, the Fed lowered rates. Remember, that does not impact mortgage rates for the first mortgage. That's HELOCs, credit cards, car loans, personal loans, things like that.
So when you hear on the news, oh, interest rates have come down, Jerome Powell is slashed interest rates, that's not affecting mortgages right off the top. Okay.
They're actually, so the Fed is actually behind of what we've already been doing. So where rates were actually as of January of 2025, they were like 7.25. We're down at 5.875. So if you think about it, that's a huge improvement, but they're not talking about it on the news. Right?
Absolutely.
So it's, don't wait for the headlines. Do your own research, speak with professionals, look at different, you know, websites. There's Forbes, there's Housing Wire, there's New York Times. There's all those that talk about
and look at mortgage interest rates specifically. Those articles, not, you know, the general interest rate articles.
Don't ask ChatGPT, please do not. But then also, if you're searching for rates, remember, look at those things that say sponsored, or understand that there's disclaimers to every rate. So when you're looking on websites, go to the disclaimers, because it will tell you, to get this rate, I need to put on an FHA loan 25% down. This is for a property in Texas with a loan amount of $250,000. Like, this doesn't apply to you. You're in South Florida buying a $600,000 home. So there's a lot of details that you've got to just pay attention to. So,
and speaking on different advertisements and things like that you see, can you explain the points?
Okay.
So, you know, I'll go and I'll be looking at, say, like rates.com or something, and I'll look at these different rates, but then they say there's a rate and a point amount of points next to it. Explain what that means.
So rates.com and LendingTree, they're not mortgage companies. They are third parties who promote everyone else, right? Yeah. So that's first thing. Second thing is points is a percentage of the loan amount that you're paying for that rate. So if you're paying 1% to get a 5.875 and your loan amount is 3,500, you're going to pay 350,000, excuse me. You're going to pay 3,500 to get that 5.875. Okay. And that's tacked on as a closing cost. So you pay it at closing. The seller can pay it with concessions. Mm-hmm. That's not a problem. Sometimes the lender will, maybe pay for it. So, I mean, we're very flexible with things like that too. So,
and what type of circumstances, are you working with different banks, and some banks will give you those type of perks? Or is it your bank specifically looks at the individual buyer and then you work out the, I guess you would call it the bank concession. You work that out per mm-hmm. buyer. It's situational.
So you can't do it situationally because then that's not fair lending.
Got it. Okay. Yeah.
So we have to be fair to everybody. If we do it for one, we do it for all. As far as we do have our own rates. And then there's rates that we can see what Chase is doing. We can see PNC. We can select those rates. Mm-hmm. It just depends who has the better rate at that day and for the cheapest points, and we go from there. So we also discuss, points on a primary residence are tax deductible. Okay. So something to consider. That's one of the tax benefits of becoming a homeowner.
Excellent, excellent. So what is one piece of advice you would give a first-time home buyer today?
I got a list. Let me pull my notes. Oh, a piece of advice that I would give. Trust the professionals you're working with. They have been doing it for years and you have the right to choose that person. So just know that you got to just trust the process.
And the news today, they've been talking about the feds or Fannie Mae and Freddie Mac buying up a lot of these mortgages.
Mortgage-backed securities.
Mortgage-backed mm-hmm. securities. Can you explain, what that means to the buyers and what that means in general? I mean, what are they buying?
Right. So the mortgage-backed securities, so Trump demanded they buy it, right? And they are following suit. They did it during COVID. They bought, I think it was like 40 billion a month, something like that. So they are starting to buy it, which means it will bring down interest rates to make things more affordable. What that does is when rates come down, prices go up because now we have an inflation of buyers coming into the market. And I think you could agree as a real estate professional Absolutely. That right now we are in a buyer's market. Yeah. When we see all these buyers come in, that creates what? Competition. Yep. And then with competition, it turns into now the seller has the power because if you're asking for a credit, and this person isn't, what is the seller going to do? Yeah. He's going to take the person that keeps money in his pocket. So I think so what do you think about that
Well, I would say it definitely is tougher when the ball's in the seller's court for the buyers. Yeah. These days I am getting a lot for the buyers as far as concessions go, price drops. Also, sellers are so willing to work with buyers through the deal. I mean, you have a lot of things that might come up. I had something where the association had too many people delinquent on their association dues, and we had a seller actually pay another person's delinquent dues. So I don't think those types of things were happening back in the day when it was a seller's market.
No.
And then also, like you're saying, that competition comes in when there's more buyers. People are willing to pay a lot more for homes, which actually brings me kind of like, people are always talking about this bubble. Mm-hmm. What do you have to say about that? Do you think that there is such a thing, or do you think it will happen here in Florida?
Well, I think prices have already I don't think, I know. Yeah. Prices have already come down, but again, it's not in the headlines, so no one's really talking about it. I know, and it's different for every area, mm-hmm. right? So like the west coast of Florida, certain areas are at a very, big drop. And then some areas like the East Coast, we're still at high values. However, like in my neighborhood, prices during COVID went up to almost $800,000 on a 3-bedroom home. And now they're back down to maybe 580, 560, or 600,000. So it did drop significantly, mm-hmm. but it's still in the eyes of people are expecting a crash. I don't see that.
And like you were saying earlier, don't wait for the market to shift to where you need it to be. You have to figure out where you place in the market and then operate on that foundation.
Yes.
So, thank you so much for coming and talking to me. Can you tell everybody where they can find you?
Yeah, so Cheryl Baldwin with Community Lending, the hero's choice for home loans. My phone number is 561-880-1204. And I look forward to serving you all.
And how about social media?
Social media, Hero's Choice Lender.
Hero's Choice Lender. And do you
Yep.
specialize in VA loans? And
I do, and I
Okay.
work a lot with the first responders, so fraternal order of police, and I go into the Army National Guard and speak to those units and educate everyone on all the different things they don't know about as far as financing. It's all a strategy. Home ownership is a strategy. It's not the forever home. It's a starter home, and then when the market booms, that's when you sell and you profit equity. Like, there's just so many ways to look at it, and it just comes down to speaking with the right professionals like yourself to see what scenario works best for you.
And then before we go, Hometown Heroes. Is it still a thing? Is there still money?
Still have 10 million in the fund as of this morning. I'm still writing Hometown Heroes transactions. So yeah, if you are a medical professional in education, we have who else? Law enforcement, fire, police, like everybody, veterans. Now, the only people that in veterans is if you're not full-time employed as a veteran or military personnel, it won't apply, unfortunately. But yes, it is still there, up to $35,000 towards your down payment, closing costs, and the rates are discounted. So they are actually better than what the market rates are as of today.
Well, guys, I hope you learned something today. Cheryl, again, thanks for meeting me out here. I am Broward Bobby Tinoco with Century 21 Tennis Realty. You guys know where you can find me. And as always, thanks for watching.
Thanks.